All right, what's going on, everybody? Chris Franks with Texas West Capital coming at y'all live here just a little bit after 11 a.m. Central Standard Time on Friday, the 6th of December, 2024, guys. Hey, listen, you've only got 19 more sleeps before Christmas, right? Y'all excited? See, I should have thought ahead on this. I should have put the scene from Elf where he jumps up Santa right here, but I didn't because I really don't know how to do all that. All I really know how to do is look at charts and let y'all know what I'm thinking and why, and preach to you about proper risk management, all that stuff. And the other thing I know how to do is to bring great people up here. So sitting in the wings here, we've got FiboSwanny. He'll be on here in just a minute to share with y'all his thoughts on what's going on as far as the charts go, especially Bitcoin, because, hey, happy 100,000 Bitcoin, right? Even though we kind of just dropped back below, but that's all right. Again, for me, looks like a big kind of flat correction right there. So other than before we get going here, guys, do me a favor. Hit the like button, hit the thumbs up, leave a quick comment, follow the channel wherever you're watching me at, or follow me if you're watching this on Twitter. Follow FiboSwanny at FiboSwanny, FiboSwanny. I really think, and I'm going to say this while he's behind the scenes here because he can't say anything to me when I say this, but I really think he needs to wear one. You remember back in the day, if you're old enough, they had those little fortune teller machines, and you put like in a quarter, and it had this dude sitting there with a big old headdress thing on and whatnot, the Swami. Well, I mean, FiboSwanny. I mean, hey, I think we need to require that he wears one of those big-ass headdress things on him when he comes on, and that way he can play the part. I think he needs to do that. See, look, man, I got people here agreeing. Mark's over there like, yes. So anyway, now that I've said my piece, I'm going to go ahead and pull him up here. How you doing,
wow. Buddy? That might be a big no. No, yeah.
If I buy it and send it to you for Christmas, man, you're going to have to wear it on the show every single time, man.
All right. That's a deal. If you send it to me, I'll wear it. But
JoJo says that would be awesome.
I've had some people call me Swami.
So yeah.
So a lot of people say Swami for some reason.
Because it sounds like it, I mean, they don't realize
it does.
Ryan Swan, right? So FiboSwanny's a play on it,
Yeah. So basically, I'm going to be that. What was that from the movie Big? You remember that machine?
Yeah. Exactly.
What was it? Zoltar or Zoltan?
That's exactly the machine I was referencing. Yes. That's exactly.
I'm Zoltan. Yeah.
See,
there we go.
Now everybody, y'all heard it. Fibbo here cannot say he doesn't understand. He didn't know, doesn't know what we're talking about. He referenced the exact thing I was just mentioning.
I know what you're talking about.
If you haven't seen Big, go see it. It is the Zoltan or whatever machine there with the headdress.
Yeah, I'm showing my age because that's an old movie.
That's back when we all liked Tom Hanks, right?
Yeah,
now we all think he's part of the Epstein thing, right?
Yeah, exactly.
Anyway.
Oh, man. Crazy. Yeah, happy 100K, man. It's a good fat-ass round number. I like it. Yeah,
exactly. And, man, it makes life a bit easier, I think. Everybody was so down. You remember, man, we were going sideways for about 8 months, and you and I kept talking about the likelihood that it was most likely just reaccumulation. And we kept talking about why from both of our perspectives. We were doing that week after week for like 8 months. And I don't know about you, but honestly, I got kind of tired of doing it.
Yeah. I mean, it was just one of those things. It took a lot longer than typical, I'd probably say.
Yeah.
But the pattern was still holding the structure. So if it was holding, I'm holding.
Exactly. And, and here's the crazy thing, we get there. And so we have and I kind of mentioned this, I think, on a different show that I did, I think on the Beards and Bitcoin show, I think I mentioned it, but there's a guy out there. He has the lead lag report. And honestly, I don't have anything against him, but I want to point this out because, the first thing you have to do when you get into markets, especially if you don't know what you're doing, is find people who know what they're doing. And most of the time, that's going to be people that have years of experience in multiple markets, right? It's just the way it is. But even with that, you're still going to get people that get caught up in their own emotions. And this is an example because, that August 5th drop, which marked the low of that range, and then we've come up ever since then. that 49,000 drop, that was Sunday night into Monday morning, and everybody's like, "Oh my God, it's the end!" Right? It's the yen trade, the yen carry trade has just imploded, 20-30 trillion dollars or more. Oh my God, it's so over. And what happened Monday morning? It just ratcheted back up instead of going down. Which, had it been that, we would have seen in the stock market, everything, we would have seen a lot of the circuit breakers getting flipped there. Because we'd had those, we'd had those limit downs happening. Because if that's what it was, then Monday morning coming in, TradFi would have been like, "Holy crap, sell everything." They would have been trying to get in before everybody else, before each other. Everything would have been limit down, but we didn't. It popped back up. But he has been holding ever since then. So now we're up 100? Oh God, what are we at right now? We're at just under 99,250 or so.
Yep.
I mean, that was 50% from where we are ago. That we are now 2 times higher than where we were, and he's still talking about it. And this guy has, tens of thousands of paying subscribers to his newsletter.
Yep.
And so, again, I don't have anything against him personally, but I just want to point out that even experienced traders, even experienced market participants can get hung up in emotions. And so the way that Fibo and I both approach the market, Fibo is a bit more mechanical than the way I look at it, but still, our aim when we're doing this is to eliminate as much emotion as possible. So Fibo does a mechanical listen. When it does this, then you do that. Period, end of sentence. And as long as you follow the model, it works, right?
Yep. I mean, there are a little bit of risk management guidelines in there, but I would say 90% mechanical.
Right. Basically, yeah.
Which takes the emotion out. That's the main goal. So
exactly. And then, of course, I teach, listen, you come in, you're going to learn how to do other wave, you're going to learn how to do Wyckoff, you're going to learn how to do price action, but they're all with the goal of understanding how and why markets are moving like they do. It's all about understanding where Fibo and I come from, which is that, listen, the greater, what do we call that? Oh my gosh, society. What do we call? My brains are frozen today. Oh my God, I can't even think what it's called. The term. And Fibo's going, "Oh, wait, what? Fibo knows the term because he's coming from the same point where he says, listen.
Are you talking about like social mood?
There you go. Thank you. Yes, social mood.
Oh, okay.
See, I told you he knew. But anyway, that's where we both come from. And even Fibo's system, for those of you that haven't ever tried it, it's based on trying to understand the psychology of what's going on in the market, right? And again, it's the same thing that I teach, but in a different way, with what we do. So with both of us, what you're getting is, listen, here's how market participants and markets tend to behave. And the more you understand about that, the less you can get out of your own emotions. Because a lot of your emotions in the market come from fear of missing out, fear of it going the other way and leaving you behind. It comes from all that. So that's kind of where we're at, that guy. So real quick here, before we go any further, you can jump over, go to allaccesstrading.com. And you can get into everything we do over there. It's all the group coaching I do that we used to charge $4,000 a year for. It's FiboSwanny's proprietary threshold theory system. It's the TWC Traders Club, where you get trades from me, Fibo, Andrew, and Vince, our head traders over there at TWC, as well as market analysis throughout the day and what we're looking at and things that we're following. All that, $97 a month, guys. So, try it for a month. If it's not for you, it's not for you. But I guarantee you're going to learn so much in that month, if you really put your mind to it, that you're going to be eons ahead of where you are right now. Yep. Okay? So we'd love for you guys to jump on there. What'd you say here, JoJo? Been part of TWC for just over a month and already know it was a great decision, great platform with great people. Yeah, our people, our people are absolutely fantastic here. Scott says Fibo's system works great. It does, yeah. Real quick here, before we jump into the markets here, bud, I got a question from Dark Slayer for you. He said about Crown's cycle time theory. Crown says his opinion is based on his research and stats. Is that, okay, he's saying that based on his opinion is that Bitcoin tops in March. Do you generally agree with that thesis, Fibo?
I can see that happening, but I'm more along the lines of that we would probably see a high in March. with probably a nice 20 to 30% correction. And then, and then further high into the year, into the fourth quarter, where I'm somewhere between October and December as the high of this run. So, but I can see that March being a spot where we get a key high, and then it'll take a time to correct and then work later into the year. But can it stop there?
Maybe in March?
There are timing and statistics that says that could be a good spot to stop as a high and work down from there. So I wouldn't surprise me if it ended up being a high at that point. It's just the way I approach the market. I have that as a timing of a high, but I don't have that as a timing as the ultimate
maybe
high.
Maybe not the cycle high, but like a local top.
Not the cycle high. Yeah.
Okay.
But you made some good points though at the beginning here about what you do here at TWC with figuring out why markets do what they do. I mean, that's a big deal. And what my fib theory came from was years and years of being a TA guy at work. I learned all about that social mood that you talk about. Because one of the key ideas that I have is that markets are driven by that collective social mood rather than external events like news. And I know that's a hard concept to grasp, and it took me years to kind of get the light bulb to go off.
Yep.
But I do challenge that conventional belief that news drives market movements, and I kind of argue against instead that causation often works in reverse. I think because it's more along the lines that social mood influences both the news and the market trends. I know that is not what people like to hear, but once you start to understand that grasp of social mood, things really start to open up on your charts, and you'll start to see things you don't normally see. It's weird. It's a really tough thing to explain, and that's why I really like what you do at TWC to explain what is actually going on, so people can understand that it's not the news that's doing it. It's that social mood. If you ever notice, as you get into a bull market, the news is generally good news, right? You see all the good news that's happening, blah, blah, blah. And then vice versa. If it's going the other direction, you get negative news all the time, that kind of thing.
Yeah.
But it's post hoc, right? It's already happened. And they're just adding narratives to figure out what's going on. I know it's a tough concept, but if you join TWC and you follow Chris and look at those things on why the market does what it does, that's how I built my model, was based on social mood and trying to find those psychology changes in the market. Not an easy task. It took years, but there's something there. It's a phenomenon that it's really tough to explain until you really get in and start digging in and learning. And then one day the light bulb will go off. I guarantee it. It did for me, and I know it did for Chris. I know there's a day that you're like, shit.
It just all of a sudden hit you. Go,
holy crap.
How did I not figure this out before? Why does it all of a sudden it makes sense? It wasn't like this gradual, maybe. It was like all of a sudden like that, right?
Yep, it was like that. And it was like, holy shit, I could actually build on this. So that's where it all starts, is going back to really understanding what social mood is. And then once you go from there, then you can start digging in even more. And I think that's what TWC does a really good job. And one of the reasons I joined up with you is because the explanation that you do on the backside is key. I mean, without it, people would just be kind of confused and lost.
The thing I found out, you and I both been doing this. You're 20 plus years. I'm 30 years this year doing it. Analysis. And, it was the one thing, it was the one constant that I kind of figured out over all those years and all the different systems that I learned and was studying all through that time. Because, I'm a student of the market, right? And everything comes back to that. When we look at news is always because something else has happened that the news happens. And that something else is the way in which people are already expressing how they feel about things that are going on in the world. And if they feel safer and not so worried, they put money in the markets. If they're feeling concerned and stressed out, regardless of what online Twitter or whatever social media says, Because a lot of times we go, oh, well, look, X is all depressive and bearish and whatever, but the markets continue to go up. Well, your feed's curated for what the algorithm believes will get you to interact the most. But the quickest way we understand how people are feeling is where do they put the money in the market or they take it out? And, and that's the same thing that you got to. It's the same thing that I got to. And once you understand that and then accept that, all of a sudden, everything else you look at in the market makes a lot more sense. All of a sudden, it makes sense. Why did, why did XYZ company have a double miss on their earnings call, yet price skyrocketed? Or why did they have a double beat by a huge amount and price still continued to drop?
Yep.
And so you'll get these answers rather than trying to come up with some silly explanation along the way. Yeah. But anyway, let's go ahead and jump in here, man. I'm sure they're excited to see your charts here. So what do you got for us, man?
Yeah, let me you have my chart up there? Because one of the things that I was talking about was like markets are a reflection of the collective social mood, right? Which fluctuates in patterns. So I map them out using my threshold theory and Fibonacci retracements and extensions and those kind of things. So it's not about the price for me. It's about the proportion and the pattern. And Chris uses Elliott Wave in a masterful way that he does it to find those patterns. I use Fibs. Yeah. Well, Fibs is kind of in the Elliott Wave too, but they both drive market prices and the narratives in the media, right? That's the way I kind of look at it. But that's what we're looking at. So as long as you can see my screen, we're going to start out with BTC on the 4 hour and kind of seeing what's going on here. Now, I'm going to start back here on this bull zone here. When this went into the bull zone back on November 5th, it looks like. And nice bull run. And then it came back down to this point right here and went into the bear zone. But the interesting thing is, let me pull this over real quick, is one of the rules that I have in my system. This is where the previous shallow fib would have been. So even though we went into this area of the bear zone here and the market went into a little bit of a correction, one of the rules is that you have to have 3 consecutive settles underneath the previous shallow fib, which, as you can see, it went into the bear zone and got nowhere near that previous shallow fib. So for me, the way I approach it is depends on how much exposure I have on. If it ends up going into a bear zone, what I'll do is I'll reduce. I do everything in 10% tranches, right? So if I have 20% long and I'm still long, and then it goes into that bear zone, if it had 3 settles already underneath the previous shallow fib, I would just exit all 20%. But since it didn't close below the shallow fib, I only exited 10% and kept exposure on because the pattern is still showing bullish structure. So I want to make sure that there's exposure in case this thing starts to continue back up to the upside. And that's kind of what we saw was it went into this period of almost kind of consolidation and not really a bearish market. It was just a little bit of a correction and went sideways. And then we went back into the bull zone, which entered in another buy. So you be long and then you're long again. And then it went up and didn't quite hit my target, which I was kind of ticked off, but that's fine. That's what it is. The market went up to 104,000 flat, right? I had an order in at 104.4 where my system was saying to sell there. But given that I don't have a ton of exposure, I didn't want to chase the market. So I was like, you know what, I'm just going to leave it alone. Now, if I had a lot of exposure and it got close to that point, I would probably exit out, take some profit. But in this case, I kind of missed it. And then it dropped. And then I bought the shallow fib at 101.4 to add. So now I'm 30% long at a 98% average from those things. So I'm still in the money a little bit here, but looking for those next 3 targets. So my 104.4 still stays. And then the next target beyond that comes from the trend-based extension that I have had here off of. I don't have it all listed on previous charts, but this came from other zones and those kind of things. But the next target up here was about 111, which comes into the next Fibonacci level that the Fibonacci extension level that comes past that 1044 target, to where it's a zone between 109K and 111.7 really. So my next target is right around 111.1 is where the next target is for that next 10%. And then if it wants to rally up even further and break that 141% and go to the 200, then you're at 122. So right now, even though we went into the bear zone, we didn't really go into a bear structure. So to me, I'm still long. I'm long that 30% with those next three targets. Now what will happen is the bear zone right now is at 95,366. So to me, that's kind of the risk that I'm taking at holding at an average of 98. That's going to be my risk there at 95.3 if it goes into the bear zone. But then again, if it goes into the bear zone at 95.3, it's still nowhere near that previous shallow fib, which is sitting at 90.7 at the moment. So if this ends up going into the bear zone at 95.3 and I'm 30% long, I'm going to drop 20% of it and get out and take that loss or wherever it ends up being. And then that other 10% I'm going to remain in case this thing rallies back up, gets into another bull zone and heads higher. Now, if we end up getting three settles underneath this 90,005, then I'm going to be exiting out of everything because we're probably going to be in a much larger correction back down into the 80s, maybe even to 70 if it gets really a lot of momentum going that direction. But right now, I don't see any of that. The momentum is still with the bears here a little bit. So given that I think we can come down and test some of these areas, but this move right here had a lot to do with that large candle we just saw a little bit ago. So, the RSI is just a derivative of price. So when you got that huge move like that, it's going to pop that into a bearish, or in other words, the red negative directional index would go elevated like it did. But as you can see, the ADX isn't really cranking out on this 4 hour candles for the bears. So to me, that move right now, finding a lot of buying interest off of that wick, has pushed this market back up, kept us in the bull zone. So I'm keeping that structure to the upside and staying long the market at this point in time on the 4 hour. So given that picture, moving over to the daily is, we've maintained the bull zone on this one for a while, and I've had a couple targets hit and some trades hit. And the latest one was the trend line objective that I had on this, just taking the distance of the trend line and take the same rate of change to the from the breakout point. Now we did break out and came back down and retested, had a little throwback to the support here before taking off, which is nice, and that's what you want to see, because this to me is a whole psychology play, right? You at first you got trench warfare on this trend line with a whole bunch of sellers that are sitting against it, right?
Yeah,
trying to hold it, and then the buyers are starting to come up, and then as you can see here, momentum is trying to build in here, and then when the ADX got a little bit higher than the previous right here, and it broke out, and then it came back down and retested, and the green positive directional index did not cross, and it kept the bulls at support. That's where the psychology comes in. Sellers trying to hold it, buyers push through, buyers took over the trench, sellers come back down, and buyers said, we're going to hold this trench now. We're holding this trend now. So you might as well just go find a new spot to sell. And that new spot to sell for me, it was that trend line objective, because this whole psychology play was, we're going to go on a nice bull run here. And it did, worked its way right up. You could have taken some profit at the 87 here, which I think I did. I had a couple other trades from back when, but ultimately I got sold back out here at the trend line objective, which was at 99.8, and then we went back down, or 99.7 or something like that, or 98.7. I can't remember exactly where it's at, but then it came back down, and then we broke into the 100K, right, into 104. But this all still remains in play, as shallow fib is a buy at 86.8 on the daily, which would keep us in the bear zone. So that's something to kind of keep an eye on, because if this 4 hour ends up breaking down on this 90,000, I think you can wick down to that 82.5 before heading higher. And that's what could possibly happen on this is if it wants to correct all the way back down to the 86, I'm fine with that because it's going to give me a spot to buy more while it's still holding a bullish structure and then head higher. But given that I'm still long the market, the next target is that 108. I've been talking the 108,000 for a while, not just on this chart, but even 6 months ago, I was on with Crown, given that 108 was my target. But I was thinking that 108 would hit by November. Should I take the win? I think probably, but it's
Close
still,
enough.
yeah, we're into December. I still think we can hit that 108 in December and likely work up to that 108, maybe a little further as we work into that March time period that everyone's kind of talking about. When you start getting into that first quarter of the year, I can see us getting into 108, maybe even further. And I'll show you that out here on the weekly chart.
Yeah.
But given that, daily's still in bull zones, momentum still strong with the bulls. We're finding a lot of buying interest on dips. I like what I'm seeing. So I wouldn't be surprised to hit 108 or even further on this. So I'm still very bullish on these charts and these patterns. Even if it corrects back down to 86, I'm still maintaining a pretty bullish mentality there.
Yeah.
But then flipping over to the weekly, this is where you're kind of seeing that March possibility and that December or October to December possibility. So what I'm looking at here is this is my threshold theory here. So I got these are the fib levels that are key to me going forward. And one of them right here is this 300% at 111. And that comes in right inside this zone that comes from this latest leg. So we had this leg up here to make a high and then came back down and retested and then broke out. So once we broke out of that high right here, 98.3 was that first target, which I already took profit on my daily from that large trade up to that point, looking for a pullback and then buying more to go forward. But then if you look back here on the old zone, the 111.8 is inside this zone of 111.7 to 118.7. So I really kind of think that 111 is something to really kind of watch as we continue higher here. And then to me, that might even be the high that we're looking at in March, or it could go even further up to the 200%, which is at 147. And maybe we see 147 by March, but maybe it takes a little bit longer than that. So what I'm looking at is this low to low to low rally. So we had a low before we rallied up, and then we corrected, and then we went back up again to a high, and then came back down for another low, and then that next low comes in at it comes in at June, which is a weird pattern. But the way I look at this is I highlighted this little area in here in blue. So I think you can get up to 111, maybe all the way up to 147 as a high somewhere around that March time period that everyone was kind of talking about. So I know it's a large range. So anywhere between 111, 148, I don't care where it ends up. But somewhere in this zone that we get up to that high in March, and then we correct back. And a couple of things here is if it does get up to the 148, which or 147 or so, which would not surprise me to happen by any means, with everything that's going on with the money flow and everything that's going on right now, I wouldn't be surprised to see it. But if this happens and I pull my fibs up to that point, as you can see here, the shallow fib would move to 98.8, which kind of comes in nicely on this move to show a low on this trend line in June. So we would get a low back down here just below 100K. Everybody was probably going to be like, the sky's falling.
It's the end of the world, right?
End of the world, all that kind of stuff. And then rally from that point to make up even higher pricing, which I like just under 200,000. I got two levels in there, a 194 and a 197. which could be something to watch for, later on. I don't know if this is going to happen, but I'm going to follow the structure. I'm going to follow the support. And if that trend line holds when it's ever tested, then I'll, that's the main thing. I take baby steps. I'm not really in the market of trying to figure out where the high is. So, but as long as the structure is in play, it's given me targets of where those highs can be.
Yeah.
And that's what I'm kind of looking at. But I like how this kind of looks. If this goes up to that point, the shallow fib fits nicely on that timing on the trend line. Now it might not be exact, it might be down here at 92.5 or, it depends on where the high ends up being. But for now we're at 104 and the shallow fib right now is at 72, but that would be from a large correction, right? So here's another thing that's kind of interesting. If it goes all the way up to this point, and you look at some of these corrections, right? You had this correction here from high to low was about 33%, right? If that's the case, if you bring it all the way up to that point, you're 33%, which is going to be, the shallow fib pretty much. But I like that no matter where it ends up, if it ends up right here or whatever, this is going to be a nice correction back down to a shallow fib that should hold the trend line. Because even if it just topped out right now and went all the way down to the trend line, we're looking at the shallow fib at that 70 mark that everybody's kind of talking about on a large correction. Can it happen? Yeah, of course it can. But right now it doesn't look like it because we got momentum behind it. We got a lot of. I mean, the RSI is it getting overbought? Yeah, a little bit, but not to the point where we've seen historically. The RSIs right here. We had a couple of times that went up well above, trending. Like you said, you get into overbought conditions, it could trend for a while. That's another thing. So to me, there's a lot going on in this chart, but I like the timing of a March possible high, and it could be the ultimate high. I don't know if it comes back down and starts breaking the trend line to make much further pricing to the downside. I don't know, but we'll find out when it gets there. But if it holds the trend line, then that October, November, December time period of using this as a support guide going forward, that's what I'm going to kind of watch on mine and kind of keep an eye on where the market's going to be and where the shallow fib is versus where the threshold is. Now, right now the threshold's at 55K, which this is a weekly, so it could take a lot for it to go down before it ends up getting into bearish structure. But then again, if it gets up to 118 or 111 or whatever, up to 146 or wherever, of course that bear zone is going to keep getting higher and higher. Most likely, if it gets up to the 147, it's going to be at a 70 to 75K floor, that kind of thing, to where it could correct back to that point pretty easily. And then that's when everybody gets scared and think it's going to go back to 10K. But that's when Chris and I will be backing up the truck to buy more.
That's right, exactly. And we'll be telling y'all. We'll be telling y'all at the time, same way we always do, and most people ignore us. We'll be telling you, listen, you should probably be buying right here.
But I mean, given the structure, I mean, right now 4-hour, daily, weekly, all in bearish structure. I don't have any problem holding longs on this right now. And continuing to ride the long. So that's where I'm at on BTC at the moment. Anything you want to pop up on BTC while we're
really nothing. I mean, it's just that again, I'm looking locally on the daily there that this is a flat correction. So you had kind of like the side. I guess I can pull it up here real quick in case people don't know what I'm talking about. Let me see here.
Yeah, I was going to pull it up. Go ahead. I'm sure you already got it on your chart.
Let me see here. Yeah. So basically this right here. And so you get, 3 waves down, 3 waves up. And usually you get 5 waves down. This looks like 3 here, so it could end up being just a WXY here. And this would actually be on Coinbase here. We didn't actually sweep the low. We broke out higher and then printed a higher low here. So if this is, complete here, it would be a running flat, and we'd look for it to go up. It's just corrective. No, it'd be a running flat. Now on Binance, it dropped down below wave A here.
Yeah,
and that would make an expanded flat.
Yep.
Yeah. So in either case, you're going to have to break out with wave B above where wave A starts. But an expanded flat, you dip down below wave A. A running flat, you stop prior to wave A. So again, this is 3 waves down. So as long as we prop it up above this swing high here at 103,665.60 here on Coinbase on the Bitcoin USD, once we do that, this is confirmed here, and we're headed up. A worst case scenario I see going on here is a 1, 2. I just see a 1, 2, 3, 4, and then a rejection gives us 5 down here. We get an expanded flat. We get the full ABC. But I think at that point, the daily pivot here around 87,695 holds its support. And so we just maybe tag that area and then we go. But I don't know. This is a pretty huge wick down here. This hourly pivot is holding support. If we jump out here to the daily, you can see that basically price itself, since it broke out above here on what day is this here? On the November 27th. I mean, we've wicked down, but we continue to remain in the upper half of this structure, and that's really bullish. Mm-hmm. So, again, my bias says, to the upside, it's down here, going to the upside. And so, a pattern-based target here based on the height on this Coinbase chart would give us about a 113 target almost. Now, it doesn't have to stop there. That's just a pattern-based target based on the height of this pullback, the overall structure. Swing high to swing low. But I like the way it looks. I like the way it's setting it up there. Well, I guess I already had it on here. Yeah.
I mean, so I got a 111, that 111.8 is pretty close to 113, but I got a range of 111 to 118. It's just that my previous threshold has that the 111.8 as a target inside that range. So I'm a little bit lower, but if I go to 111.8 and I get filled on my profit and it goes to 113, I'm not going to cry about it.
Yeah, right.
I'm going to take the profit and run, right? But
exactly.
Yeah, no, go ahead.
But again, when we're talking about here, I want you guys to understand. When Fibo and I are up here talking, when we're always talking about trading, it's always from a risk first perspective. I tweeted out something earlier today where I said, this truth that people don't like to hear, and many of y'all probably fall into this. So if it hurts, pay attention and then do something better about it, okay? But the reality of it is, again, this is for me and Fibo, 50 plus years together, in markets. Most retail market participants are gamblers that are masquerading as traders. Everybody's trying to get that dopamine hit. And it's a lot more difficult today than I think even when Fibo and I started, decades ago, because social media and dopamine is such a, constant everyday want to hit that, right? But really,
I mean, when I started trading, I didn't even own a cell phone. They weren't even out yet.
Yeah.
You couldn't get any information except for documents for, like the crop report and the cattle report for the week,
Yeah, exactly. And I mean, so guys, listen, often when I say that, people tend to get hurt and they tend to lash out rather than to step back and go, holy crap, that's me. Because once you realize, recognize, understand, accept that you're doing something that you shouldn't, now you have the opportunity to correct it. Until you do all that and accept it, you're going to sit there and just lash out and fight back and no, not me, and call me names or call Fibo names. People tend to call me names more than Fibo, but you do that, but it's all on you, right? I mean, if you want to be better at whatever it is you're doing, you have to be honest with yourself about what am I doing wrong with it at the moment? Because until you do that, and you're honest with yourself about it, and you accept it, you can't change it. And you absolutely have to be willing to change the things that you're not doing correctly to get in there other side. So, if you saw that and you got offended, good. And I mean that in the best way possible. I hope that you said that you go, okay, if I'm honest, I'm looking at this. Yeah, I'm not really paying attention to risk management. I'm not doing all these things that I need to do. I'm not putting in the focus and the effort and the discipline that I need to in order to get really good at this. Because once you recognize and you accept it, then you can change. We've all had to do that. Fibo had to do it when he started. Fibo did not come out. I'm going to tell you right now, guys, Fibo did not come out hitting 100% or even 50% starting out. Neither did I. Nobody does. We all have to go through that point if we're lucky to get to where you can be in for, decades.
Well, according to Vince, I started trading when they invented the telephone. So, me and Alexander Graham Bell were like best buds, man. We knew what was up.
Yeah, exactly. So, but we really hope, again, we're going to get back to charts in a minute, but Fibbo and I really hope that you guys are listening to this other stuff we talk about every time we're together, this emotional stuff, this psychological stuff, this risk management stuff, because those are the things at the end of the day that are going to determine whether or not you're successful, not the next new system you learn. If you can't figure out that other stuff, then you're going to have trouble even following Fibbo's mechanical system, because you're going to not follow the rules. If you're emotional about it, rules be damned. Throw them out the window. Oh, I'm supposed to get out because it hit my stop loss. Nope, I'm going to hold on because it's going to go back up, Or I'm supposed to take profit because it hit my thing. No, it's going to go further. What if I miss out? So really, guys, these things that you learn, what determines whether you're really going to truly be successful as a trader, take it from guys that have been in this 20 and 30 years, guys, is what do you understand about the psychology and the emotional side of it, especially in relation to you? And are you being honest with yourself about it? And what do you understand about proper risk management? And are you doing it every single time? The only thing you control is how much you lose. That's the only thing. So 30 years doing this, I still work on risk management, because every tiny little bit that I can get better at that means exponentially the greater my returns as I continue, doing this as a profession. Yep. So anyway, just wanted to say that there, guys. Okay.
hey, there's nothing wrong with that, because markets are as much about psychology as they are about economics, which I don't even think economics really has any play in financial markets, but that's another whole ball game. But psychology is key, and that's really what my whole system is based on. Like we talked about, the old crop reports and the cattle reports and all that.
Yeah,
it's still economic fundamental data, right?
Yep.
And that's what I kind of worked with. That's all I had. But then as I started to learn more about price action and just psychology in general, that's where it really started to click. And that's where the social mood came from and all of that. And then I was like, well, I don't even need these reports anymore. I could just measure psychology and price action. And to me, that makes much more sense. I know it's a contrarian view, but it's I don't know. It's just a different way of looking at it, I guess. I mean, it's not a right or wrong either. You can model fundamental data and still trade. I mean, there's people that do it. I'm not good at it. I don't understand it. I only understand the buying and the selling and the patterns that people are making, either consciously or unconsciously. Unconsciously.
Yeah, real quick here.
What I meant.
First of all, Cretan, welcome, man. He said earlier that he just joined TWC, so we're excited to have you with us. He said, totally agree. Is there material we can review to brush up and make sure our risk management is solid? Yeah, so with what I teach, if you go into the Trader Foundations on the left side of your app, on those spaces, there's a Trader's Foundation. Go in there. There's a bunch of basic, understanding how charts work and all this kind of stuff. But there's a risk management section in there. That's the risk management that I use. Do that. If you're learning Fibbo's system, he has a different risk management system that he uses for his system, because the way his system is set up. So you're going to want to learn that with his system, with that. But for most everything else, you can use the one that I use on there. But if you're using Fibbo's system, you definitely want to, go through his core stuff for his threshold theory that you have access to, at that $97 a month all access pass that we have for our group coaching here. And you'll have access to that, and make sure that you follow his risk management for his particular system.
Yeah. And that was what I was kind of talking about earlier on the 4 hour, right? On how I approach holding a certain percentage versus going into the bear zone and holding exposure if it's still bullish, that kind of stuff. So that's where that risk management kind of comes into play. But then again, when you talk about different risk management plays, even if you took the way you do risk management and use my system, it would still work, because even though I apply my risk management in a way that I do, might not necessarily fit the mentality of the person using the system, but at least it's a guide to show you how I approach it. And then people can always adapt to their own needs, and get their own risk management plan, no matter whose system they're using or whatever. I know that gets confusing, but at least I can give you a guideline of how I approach things.
Yeah.
Given that, I just wanted to say, and other people were saying, we're at 101 so far, a little rally. That's nice.
I'm back over 100 on the show.
So we'll just keep talking. As long as we keep talking and it's going up, we'll just keep talking, right? All right, let's go to Ethereum. Another one that's been kind of kicking butt here lately. On the 4 hour here, we went into the bull zone back here on November 6th. So pretty much same time BTC did on the bull zone there. The difference is BTC went into a bear zone that didn't really go into a bear structure, but it did give a little bit of correction, then headed higher. This one rode the rails here tight for a while. Did not fall into it, which is amazing to me. But that's what really helps me solidify my system for me is if this holds here and this is holding, I don't know where the nut was at the time, but you had a correction here. So this support right here, let's see where it was just for kicks and giggles. Let's pull this down. The 38.2% level right here, wicked below it, never had 3 settles below it, and rode the rails here for a while. And down here, it kept the bull zone the entire time. So if you were long and this went down and tested, for one, you would have bought the shallow fib, waiting to see if it would have went into the bear zone to negate the long, but never did. So off to the races and making good profit, right? So to me, when I do this analysis to figure out where the bear and bull zones are, when they hit like this, it makes me so much more comfortable going in and buying a market at that point, knowing that the bull structure could still maintain, and it did, which was very nice. So we've been rallying up. We had another target in here that hit at this point, came down, kind of tested it in here a little bit. Then we went up, hit another target at the 38.81, hit the other day on the 4 hour here. Came back down. I was waiting to have 3 consecutive settles above it to get back long again. I'm not long ETH 4 hour. I'm still long on the daily. So I was looking for 3 settles above it. This will be the second one. If we get a third settle, I will end up going long again on the 4 hour. And then the next target will be, which comes from much late, way back in history. It's a 200%. This target here is the one that hit in this zone right here. And then the 200% is at 42.44. So it just goes back a little ways. But that's where that comes from. So if you are long, that's the next target based on my system. I am not long, but I could be long here in another 6 hours if it stays above this 38.81. But if it comes back down below here, and even if I get filled and then it drops all the way down to the shallow fib, that would be something to look for. You'll have to watch for that because it'll break down below. So that's a long ways away. But right now, I'm looking for a possible long to get to that 42.45 on the 4 hour.
Well, I've got real quick here, man. My next target on Ethereum is 42.35 3/4.
Boom.
Almost exactly right there, the same place you're looking.
Nice. That's what I like to see.
Yeah.
I like when different analysis comes together and shows targets like that. Going on to the daily. Just hit target on my 200% off my threshold theory at 40.38. Just took profit, which was a 48% gain. Not going to complain about that at all. Did take a while. And that's another thing that I want to talk about with my system is my system being mechanical, being conservative. It does take time sometimes, and it does take patience. And you might be holding on to a position for a week. Maybe you're going to hold on for a month. And as long as it's holding and it's heading toward a certain take profit target, I just wait it out. I don't chase the market and thinking, I better get out now. It looks too good and all that kind of stuff, because that's where social media will start to get into your head going, oh, should I do this? Should I do that? Should I do this? So sometimes it's a little bit of a wait, but I'll wait a year for 48%. I don't care. If I got a position on and it takes a while and it's still maintaining that structure to get to my take profit, I'm going to hold it. But that's where we're at the moment. I'm still long 10% because I still had 20% on with the target at the 40.38, which I took today, and I showed my group and everybody, so they should all be taking some profit, hopefully. And then not that it's financial advice. I'm taking profit. You can take profit if you want.
Do what you need to do.
That's where my system says to take profit. So I did there. So next is two things: either a drop back to 34.24 on a shallow fib on a little bit of a correction, which is well into we'll still maintain the bullish zone because you get all the way down to 30.25 at the moment. So a drop to the shallow fib would be a buy, or if I want to add more, 3 consecutive settles above the 40.38, and I'll add more. But I'm actually still long 10%, with the next target being the trend line break, just like I did on the BTC. Furthest point underneath the trend line to the trend line itself.
Yep.
Take that same rate of change. And what I like about this one is it tags, once it makes a new high here, the next extension is 44.79 to 47.43. And this tags right inside this zone. So to me, that's my next target. It's basically 44.80 is where my next target's going to be based on the trend line break and the Fibonacci extension level. Those two coming together for me is why that is the next take profit target for the 10% I currently have on. Hopefully I'll be adding more 10% on 3 settles above it, or it corrects back and I buy more and then go back up and hit this target. And if I get any other additional longs, the next target's not until 58.31, which is way up there. So we'll have to kind of see how this plays out. But everything's looking good on the ETH, on Ethereum, on the daily. Bullish structure's looking good. Momentum's looking good. Nowhere near overbought conditions yet, based on historicals. We're nice into the bull zone. Got a little buying interest area to go up. Now, if we look at the weekly is still in the bull zone. Got a little close down here, but it maintained it. But if you look at this one, and I take the trend line break on this one, because we had this trend line break going to the downside and it went down and hit the target really nicely while it was in the bear zone. Came down, hit the target, was getting into the point where it was getting oversold, and then we broke into the bull zone right at this point. You could have done it two ways. We broke the trend line, 3 settles beyond the trend line. Could have been a buy if you wanted to trade the trend line. But in this case, I waited for the bull zone, and then once it went into the bull zone, then it was a buy, and then we went off to the races there. Now, what I'm looking at here is a couple of things. The previous threshold 200% is at 59.60. If you look at just the overall, the one that a lot of people will look is the absolute high to low. That 100% is, or that's a trend-based extension. Excuse my way too many fibs at once. If you take the low to high here, it's a trend-based extension to show this leg correction, and then once it broke that high, that's where the first level of where profit could be taken is at 56.57 up to 59.60 is this zone in here. So to me, the 200% matches the trend line break objective. So for me, that target for me is at 59.60, wait, I take that back. 58.80 is where, and it kind of falls inside that zone between the 56 and the 59 here. And that's right where this trend line break is. So for me, 58.80 is a little bit more of the longer term look of where this market could be. It could break back to the shallow fib at 32.03 and still maintain structure. I don't have the thing on here, but it will, and then go higher. The one thing I like about the weekly being up here at 58.80 is it makes sense for me to this 58.31 on the daily makes sense to me of that. Yes, that is a nice target to look for on the daily if we get another long position. Now, of course, I'm going to take profit at the 44.95 area here on that trend line extension or trend line break objective. But then if I get another 10%, that I'm willing to hold it all the way out to this 58 and change, because the weekly is giving me nice targets at that exact same price based on different breaks and different bull and bear zones. So those two matching up, I really like that 5,800 area to look for on Ethereum going forward. So everything looking good on Ethereum too. So bullish BTC, bullish ETH, and going from there. And a lot of people would be like, alt season and all that. I don't really care about BTC and alt season and all of that. Is because I look at everything on an individual basis. Everything to me has its own psychology bucket. And things are going to be maintained in there. Now, I mean, of course, you can look at, dominance and those kind of things. So when BTC dominance drops, maybe the alt seasons are going to, the alts are going to get a little bit more play, and that makes sense. But I'm going to look at everything individually because to me, everyone's got a little bit of a different psychology of why buying and selling is happening in that asset versus other assets. But that all comes back to the social mood and all that as you learn psychology and those kind of things. But going further, I'm just going to go through a couple of these real quick. I'm not trading. I'm not in gold. I'm not in dollar at the moment, but gold at the moment went into the bear zone. So I've been looking for the 200% level to buy on a dip here before I would do anything, or a new bull zone possibly. So I just been kind of waiting for that target to the downside here at 26.33 is what I have here on the 4 hour. If you look here on the daily is also in the bear zone, and I got a target at the shallow. Well, it went into the bear zone, but never went below the previous shallow fib. So again, it's one of those scenarios that, yes, it went bearish on the structure a little bit on the correction, but it didn't break the bullish structure. So to me, the buy is at the 38.2% level at 25.13. That's where my target is. So didn't hit on this at this one. Would have been nice because I would have traded it nicely. But so far 25.13 on the daily and 26.33 on the 4 hour. So I'm just waiting for some downside move there or bull zones if it starts to rally and gets us into a new bull zone. The only reason I still have the target here at 92 or at 29.23 is it didn't go into the or below the previous shallow fib. So anybody that's still long, I got out early because I didn't want to mess with it. But anybody that's still using the system and is still long, that next target is still at 29.23 if you are long at the moment. Now, if it comes down here and gets bought, then I will reestablish that as my next target. But anybody that's still long, that is the take profit target if it does rally on out of here instead of going back down to hit our target. Dollar is in the bear zone on the 4 hour. It's got kind of consolidation there. I've been waiting for a move down to the 100% here or the previous threshold of 103.96. Just waiting for a downside move to maybe go long. I haven't really been trading the dollar as much as I used to. I've just been kind of using it as a guide more than anything else. But just waiting for a downside move there. Dollar on the daily, for instance, is still in the bull zone and is hitting the shallow fib. I am not trading it. But if you are trading it, it is a buy here while in the bull zone with a target of 108.8, which is the 200%. Because once the 141% traded here and got 3 settles above it, this zone in here becomes a support. And the bottom of that zone is matching the current shallow fib. So both of those together should find buying interest and hold there. So if you are trading it on the daily, you're going to buy it here with the target of 108. But if it ends up breaking down into the bull zone, that's going to be your risk. If it goes into the bear zone, then you get out, take your loss. I am not trading it, but that's the way you would approach it on the dollar daily here. Going on to SPY.
Look at that.
Man, I made a shit ton of money in SPY lately. It's awesome. I am no longer in SPY. I took this last target. The last target hit here at 60.93. That hit a while back. I did not buy. I don't know if it had 3 settles above it. If it did, it would have been a buy right here. I didn't buy, and it didn't get down to the shallow fib. So now I'm just waiting for a shallow fib move or 3 settles above that. I don't know if it did. If it did, then you could be long still. I'll wait for another 3 settles here. We've had one. We're working the second one here. It has to be above 60.9350. So 3 settles, and then the next target is the trend line break, which is at 61.27 on that. So if you're still long, it's still bullish. I'd still hold your long all the way up to the 61.27 and take profit there. I will add if I get the 3 settles or a shallow fib dip, because the shallow fib will bring us down to 60.40 or 60.70 on the shallow fib at the moment, and 60.48 is the bear zone. So if it gets down to that point, it would be a nice buy with a target of 61.27. If you flip on to the daily, the daily had the same target, 60.8350. I took profit there, waiting for 3 settles above it. If we settle above 60.83 today, later today, that would also be a buy with a target on this one all the way up to 62.57, which is just way up there, which would be really nice. But that would be the next target for me if I get back long. I'm flat on this because I took my last bit there at 60.83, waiting for a dip to the shallow fib or 3 settles. So that's where I'm at. Shallow fib right now is at 60.50. So if it dips down to that point, I'll buy there. Now this is this comes into a risk management play also, and then it also comes into exposure, all that kind of stuff. If I end up buying here with 3 settles and it dips to the shallow fib, I probably won't add because it's based on exposure and all that. I don't usually add on these because it's leverage. Because this is futures. To me, if it was spot, I would probably add to take the dollar average or the cost average. In this case, with it being leverage, depending on how my books look, most likely I probably won't add to that losing position while I'm in leverage. I will just hold it and keep the risk because I already know the risk. The risk to me is already the bear zone. So I'm going to hold that for that kind of thing. So, but that comes into play based on people's risk tolerance. You know, how's your books look? How you doing this month? All that kind of stuff that comes into play there. So, but bullish. Everything's still looking pretty strong. I wouldn't be surprised for this thing to keep continuing to rally out to the upside. While I have that, I'll look at the NASDAQ is another one I'm in. Went into the bull zone. I had some earlier buys back in here. We hit this zone, and we've already had 3 settles above the 141, which raises the probability of getting all the way up to the 200%. Because we had 3 settles here, it dipped, had 3 settles again. You would have been long at this point. That's where I'm long at the moment. And the same kind of thing. The 3 settles above this is where I bought right in here. It dipped all the way down here, scaring the shit out of me. But the zone here between 25 and 20.9 is where the support is. And that held without 3 settles below it. So to me, that's the support. And that keeps this 200% target alive without that breaking down at that point. Because right now, this is where the shallow fib would have been. I take that back. It would have been up here. I bought the 3 settles. The shallow fib would have been at 20.8. You could have bought there if you didn't do the 3 settles. I did not add. I just have this position up here at around 21 or so. I can't remember the exact number where I got filled. But looking at this, coming down, holding the bull zone here, and heading higher. My target here at 22.4 is still in play at the 200%. So given that is still in play, the SPY is still in bull, holding really good support levels. I wouldn't be surprised to move on up and hit these upside targets. Just a couple other things I'm trading. I trade stacks as one of the shit coins. I don't trade a lot of shit coins, but this is just one of them I like. So I've been trading it. Went bull zone, hit a target, got back in. It's shallow fib, got another target hit here. Currently, I don't know what I have on at the moment. Yeah, I don't have any stacks on at the moment because we took profit right here as the target hit at 294, which comes from I don't have it on here, but it came from my fib extensions back here in the zone, and the 392 is the 200%. So those are still in play. I just have it over here so you can kind of see the chart here. But this target here hit that fib extension zone. So I'm looking to buy at 244 on a dip, or if we get 3 settles above this target, or I take that back. It's got to be the 141. 3 settles above the 3088. I will buy and get long again with a target of 392, or I'll buy at 244 on a dip, or basically 245 rounded on the shallow fib dip to go there. So bull zone on stacks, I like it. The reason I like that is because it ties into Bitcoin, and with Bitcoin being bullish, this one kind of follows it a little bit. So I've been trading this one also. And then on the daily went bull zone, hit the target. We had 3 settles above it, so I'm back long, just waiting for the target at 315 on that, and then we can look at further targets as it goes. But nice little move up to that target at 315, still in play. Just kind of waiting that one out. Solana, this one was an interesting one. Went into the bear zone. The previous shallow fib was at 227.11. So as it dipped down into the bear zone here, this was a buy for me. So I bought there, and then went up, came back down. I was looking for 3 settles here. We actually got 3 settles with this wick right here, but instead of me getting out, and it was because I only had 10%, I placed a stop just under the low at 214.99. So the way I look at this is where that when Chris and I was talking earlier about the steadfast rules versus guidelines. This is a guideline because the rule is get out with 3 settles. But when you have a wick like that you find buying interest that wicks up, but it still gives you that 3rd settle underneath, but that you have that large wick, and I only have 10%, so I don't have a lot of exposure, and I've already taken the risk. That's why I went ahead and just placed a stop instead of just getting out, just because of the price action that was happening on that last settle. Now that's a guideline. Now you could have got out and been fine. You would have taken a slight loss, and it wouldn't have been that bad because you would have bought at 227, probably got out at like 225. It wouldn't have been that big of a deal. But I went ahead and placed a stop, never went back down and got us, and now I'm long that 10%. I still have the stop placed. Just in case I'm not watching it or whatever. But I'm willing to take that risk because I'm already saying, hey, I'm already taking the risk, and it was there. So that's where the rules and the guidelines come into play. But if you follow the rules, you would have got out and you would have been fine. You would have just been waiting for a new bull zone, and you would have got in on that. Or you could have wait for it to come back down to the previous shallow fib and buy it again, and then see if it stopped you out again or not. But given that, I'm long with a target of 289, which comes from, again, previous stuff that you can't see, but it's the 200% right there at 290.25. I just threw in there around 289, just underneath that is where that target is. So my 10%, it has a 289 target. If it goes in, which for it to get up to 289, it's going to click into the bull zone. So what I will buy more to kind of press the position once it goes into the bull zone. And then the next target's going to be, you had this move to the upside, you had a correction. And then if it breaks that into a new high, that trend base extension gives us 313 as the target there for that next buy. Now, if you're looking at it on the daily actually hit my target and we filled. And then we bought back at the shallow fib. Very nice. That's the way I like to see it. Hit the target, come back down, fill the shallow fib, and I got filled in, I think at 219.50. I rounded it up. It was at 219.38. I just rounded it up a little bit, but I got filled either way. And then the next target on this is 287, which is the 200% off the daily on this. So just waiting for a nice move to the upside. And then
it
again,
looks good. it looks good. You've got a 3-wave pullback, and then you've broken out through that middle wave, through the second wave on the pullback. So, yeah, I mean, I'm with you. It looks good for a new rally higher.
Yep. And then 316 is just the trend line break extension, or the objective there, just to give you like a target there. I'm only 10% long at the moment. So hopefully it gets up to this target and fills me, and then I come back down and fit. And oh, I forgot to move the shallow fib up here a little bit. Oh no, it's there. No, but if it gets up to that point, then the shallow fib would be 233, and then you buy that on a dip, and then you'd have 316 as target. Otherwise, you're long and then take the profit at 287. Couple other ones real quick. MSTR on the daily. Kind of a weird chart because it's just been a weird move. But if you play my threshold theory, went into the bull zone here, had a couple targets here on the 200%, filled at 375, and then I had a 300% at 513, which also hit pretty nicely. If you took the trend, and now what I'm looking at is just this trend-based extension. So the next target for me is at 655. The shallow fib here is at 391.62. That's where you buy in at. If you haven't bought in yet, it's at 400. You might as well buy it. I mean, it's bullish. We're at support, but that's where the previous target here at 200 is at 375. So with it getting, you could do it two ways. You could have bought 3 settles above it, or buy the shallow fib. Either way, you're going to be bought right around that $390 to $400 range anyway. So the next target for that is 655, which would be a nice little run on that. I wonder what hold on a second. Let me look at the MSTR on the weekly. See what my target is on that. Yeah, target hit, shallow fib. It filled and then came back down. Shallow fib was at 347. And then the target for this one is at 570 on this. So 570 on the weekly, 655. I mean, if you want to get out early on this one at 570, you can. But 655 is where the target's going to be on the daily. So pretty bullish on MSTR for sure. Both daily and weekly are still bullish, pretty strong. So what can I say? Buy dips on MSTR, it looks like.
Yeah, I've got if we can get a little rally through 453, I've got a pattern target of 724 on that. So
no problem.
What you got? So yeah.
Yep, that makes that 655 a no-brainer, right?
Yeah. Exactly.
All right. NVIDIA went into the bull zone, hit the target at 149 nicely, came back down, filled the shallow fib at 141, went down and tested. We filled here, but then came back down to the 61.8% level at 133. But holy crap, it held the bull zone. Wow. So we've been up. So right now, shallow fibs at 141. We're a little bit above water. But when you look at the next move based on my threshold back here, you could do two things. I already bought the shallow fib. If you didn't and you want to get in, you could buy 3 settles above 149. But then you might be pretty tight into that. But 161 is the next target on this. So my buy at 141's got a 161 target. So, I mean, you're probably talking, can't do the math in my head. So I'm just going to go ahead and just do this. You're looking at 14%, maybe 15%, somewhere right around there. So yeah, you're looking at a 15% trade with a little bit of a risk. I don't have the thing on here, but if you look at 133, I mean, you're looking at a little bit of a risk there, but not too much.
I like semis right now. SMCI, you might have been paying attention to what I was saying there in TWC, but SMCI, everybody freaked out about. They had the big pullback. Looks like a perfect wave for 38.2 retracement. We got a huge monthly. If you look at the monthly candles, great wick out of it. And so I think SMCI potentially is good to go for new highs. SMCI doing all right there. NVIDIA, I think, still has some higher to go here. I just think semis, in general, are looking pretty decent right now.
Yeah,
So,
cool.
yeah.
I saw somebody just ask real quick in the chat about FTM on the daily, so I thought I'd just pull that one up. Almost to my target. The 200% is at 138, 1.382. So that's where we're at the moment. The target here hit right like that. Oh. First target was right here, just inside the zone, which actually hit. Traded up a little bit, but as you can see, as it traded up there, it came back down and hit the shallow fib here. So you'd be back long with the target at 1.382. It hasn't quite hit there yet. And again, being close like this, it comes back to risk management. If you got a lot of exposure, maybe you take some profit. If you don't have a lot of exposure, just wait it out, and hopefully it'll come up there and tag it. And then what you'll end up doing is, if it rallies on out of here, 3 settles above the 200% would be a buy, or a correction back down to the shallow fib, which is at 112. And then you would buy that. And then what I would end up doing is I'd have to either go back into history here to find this 200% mark, and then I would find the spot, and it looks like this is probably a good spot right here on the break. So we can do this real quick. Let's just throw in the fib. Oh, shit, where was it? Oh, right here. You're looking at about right there, all the way down to the low. Looks to be, this is the low. Yep. So the next level for me is my threshold started right there, which falls into this zone. So you got 2 things. Let's see here. These are going to be the next 2 targets. This zone and then 259 roughly. So when you look at it over here, come back to where we're at. If you buy 3 settles above this, the next target's 177. If it dips back down to the shallow fib, the next target's 177. If you end up with further out targets, if you have more longs or whatever, the next one will be 258. So it's just kind of give you an idea of how I look at that. Is once my target hits, and if I do get 3 buys above the 200%, it's got to give me the next targets. You can either look back in history like that, but if you get into price discovery, which a lot of these are, and you don't have anything to go back to, that's where the trend-based extensions come into play. And in this case, the trend-based extension on this one, I'll just look at this leg just for kicks and giggles. I'd have to go back and see like what looks better and what doesn't, but the magnet got me on that one. Actually, there was a little bit of more of a high here, and then we can go to this one. Nah, I don't like that. I'd have to go back and see based on thresholds which one makes more sense. But right now, this 100% matched the target here pretty good. So you could actually start to use these if you want. This one's like $1.60 as the next target to the upside instead of $1.77. But since you can go back in history, I wouldn't use this because I have something to go back to show where there was, I guess what a day traders call it, order blocks or periods of where there was a lot of action. Some people can use the volume indicator on the side to show you where there was bigger volume, that kind of thing. There's different ways of doing it, but I wouldn't normally do that. But if there wasn't any, if we were in price discovery, then I would use that. Otherwise, I'm going to go back and find where those next zones are, and that's where I find those zones, and that's where psychology comes into play on why I find those. To me, it's not about price; it's about psychology changes in the market. And to me, if psychology back then was giving buyers and sellers a headache, then these are going to be levels that are going to be buyers and sellers are going to be, having a headache, I guess. But I don't know. That was a weird analogy, but that's how it goes. But that's what I got. I know we've been going for a while, and I've been talking for a while, so hopefully it was.
No, it's all good, man. That's what the people are here for. I did see somebody else a while ago they were asking about sound, and sound is funny because it's on the NASDAQ. It's one I was actually looking at last night, and I almost put into the
What's the
market
ticker on
wrap that I do for the Traders Club there. Let me see here. So here's what I have on Sound here, SOUN.
Shit, I've never even looked at that ever. What is that?
So
a
basically,
weekly?
I've got that's weekly right here. They were asking about the daily and the weekly. I've just got time here to throw the weekly on, but I think we got a 1 and a flat is a 2, and then 1, 2, 3, 4 is a triangle. Working on 5, and so in this 5 here, if we measure out this pullback for 4, the height of that triangle, it gives us this target up here at around 1980. And then you can see here with a 1 and a 2, wave 3 is right around 1565. We just about hit that. So we might be done with wave 3 there. And if we just do a 38.2 pullback, as we usually look for, that's 1087 for 4, which gives us 5 at about 1961. So it's right there around that 1981 pattern target. It's also just shy of the wave 3 target here at 2261. So what I'm looking for is I'm looking to see if we can get a rejection here. And if we do, I want to look right around 1080, about 1087 or so as the initial target. If we can get a rally up out of there, then I'll look up here around 1961 to 2261 as that next target up. And that would be 3, and then we get a 4 on the pullback, and then we get a 5 up higher. But locally right now, that's what I'm looking at. If we continue rallying through 1565 from here, though, secondary target is going to be the 1961 there. And then we'll look for a rejection there to pull back for this wave 4. But right now, we're aligning really well with the targets here. I'd love to see when you have this 4th wave pattern target coming up around, this interior wave 5 rally, the 200% right around the same, which is where we normally look to go. And that's just shy of that, 1, 2, 3 target. So for me, a lot of good look in that area. We just need to see if we can get a rejection here and kind of.
Can you do something for me real quick?
What's that?
Can you do something for me real quick on this chart?
Yeah.
Go to the very high at the beginning and draw a trend line down to where you have the circle B.
Okay. And then check the height.
Yeah. Check the height on that.
Okay.
The way I
do it
measure
from right
it.
here, right?
Yep. All the way to the trend line.
Okay.
And then move it over to the
All
break
right.
point.
Do what?
Take that same distance and just move it over to where it broke out the trend line.
Oh yeah, okay, yeah. See here, right about.
Where does that put you?
Right around 2486.
Is that within the?
Yeah, just that's just a slightly higher than the minimum expected wave 3 target. So usually wave 3 should be right around there. So I like that as well. There's a lot of confluence in that 19 and a half to what is that 24 and a half kind of area. Yeah. So I definitely like that as a target range.
I never looked at it before. I was just eyeballing it and saw that trend line. So I was thinking that measurement might be pretty close to what you were just talking about.
It is. And I like it. I love confluence. That's how I trade. I don't, as I often, teach traders, you don't enter just because there's a chance. You look for
another one that you could look at. Here's another one, Chris. Go take a trend line off of where it broke out of the trend line there and made a high. Take a trend line from that high
to that
down.
Point?
Yep. Right there. Take that distance, and I'm just curious, maybe a little short. But if you take that distance to the break point, that would have been the target on that break. It's up a little higher, but that's the point where it should start to correct back. But it actually went up a little further than that. But that's typically the minimum. Usually those are minimum targets.
Yeah.
It depends, but on a weekly it could be different. But that looking pretty good.
Well, I think this is important. I mean, I think this is a great way to kind of end today. Is when you're trading, and you're kind of like, okay, well, where should I be looking to target? Well, this obviously is a good technique here to probably get you into a pretty decent target area, as we can, keep showing, as you show on your charts time and time again, and we're showing right here. Again, most people, listen, guys, real quick here before we get off here. Most of y'all have been so concerned about, selling the absolute high and buying the absolute low over and over again, right? I'm going to tell you right now, for the most part in your trading, you're making life absolutely much more ridiculously difficult than it has to be. You're going to rarely get those, okay? Instead, what you should be focusing on doing is identifying the trend, getting into the trend, locking in profit in the trend, rinse and repeat. If you can do that, you are going to be so much, just that one little change in the way that you approach markets is going to put you so much further ahead than you've ever been when you always try and, time the exact highs and lows. Because what you do is you let time and compounding do the work. That'll allow you to get bigger position sizes, which add to bigger profit the next time. You continue doing that, and you don't worry that you don't get the exact low. You don't worry that you don't get the exact high. You're getting the meat of the movement in what you're doing. And I'm going to tell you guys, honestly, other than proper risk management, that's one of the biggest, pro trader kind of tips that I can give you. Stop focusing on trying to get the absolute high. Stop being worried that, oh my God, if I lock in this great profit I have, what if price goes up another 10%? What if it does? Who cares? Do you want to learn how to get back in there? Come join us. I've got like 40 different strategies to get into a trend that's already established, okay? If you're really that concerned about it, pay $97 a month, guys. It's so damn inexpensive for what it has the potential to do for you as a trader, okay? But even if you're not willing to do that, if you're not willing to put money into yourself for that, pay attention to what you're doing, what we're telling you right here for free. Focus on just locking in profit consistently. Stop focusing on trying to get the absolute top and the absolute bottom and getting all upset that, oh my God, I might miss out on some money. Because as long as you're consistently locking in profit, you're going to blow away anything you've ever done in the past. I tell you that right now. That's honestly the way it is. If you want to know what makes professional traders, they lock in profit consistently. They don't hit the absolute highs and the absolute lows. They lock in, they identify the trend, get into the trend, lock in profits while in the trend, rinse and repeat. Okay, guys? I'm telling you guys, I can't stress this enough. If you've come in and gone through this show this long, and the only thing you get out of this show, everything we talked about is what I'm saying right here, you're going to be a better trader for it. It is really that simple. I keep telling you guys, trading is simple. It's not easy. It's not easy because of your emotions and what you think has to happen and things you think you have to do. But it's really simple. Price just moves from liquidity to liquidity. Sometimes it goes through liquidity to the next liquidity, but that's all it does. It's that simple, but it's not easy to do that, right? Anyway.
That is true.
But
anyway,
good
point, though. Good point to end on.
I mean, I think so. Again, it's what we try to do, right? Even if nobody, even if they're not going to step up and, join in whatever, we still want to leave them with actionable information, things that can help them out as traders. And, hopefully you'll come try us out for at least a month. Like I said, worst case scenario, you decide at the end of the day it isn't for you, but you're going to learn so much about how to understand markets and proper risk management and the importance of all these other things that I kind of touch on in here, that you're going to be a better trader if you really apply yourself for that month. You're going to be just so much a better trader than even if you didn't. And that's what our focus is on, guys. Whether you want to say for a month, a couple of months, a year, years, we've got people that have been with us for years and years and years. And they continue to do that. And that was before when we were charging $4,000 a month for it, right? But they do it because the value's there.
$4,000 a month?
39. Well, I'm sorry, not a month. Yeah, I wish. No, a year. $39.97 a year. 50,000 a year, man. That would have been great. But
if you got $1 million profits, that'd be good.
But it's all about learning these things that Fibo and myself have learned over the decades we've been into it, that are infinitely more important than even the technical stuff we talk about on the analysis and the charts. And you can pick up a lot of that in the first month with us. So like I said, even if you come and you decide, hey, you know what? It's really not for me. Soak up everything you can that first month, and you're going to definitely be on a much better track as a trader than had you not. So I believe that much in what it is because, Fibo and I are proof. We're proof. We're still doing this, for years here, decades. So anyway, let me see here. What does it say? Kyle says, real talk right here. Seth says, I've made a bunch more money this year doing just that, getting 1 to 3% hitting signals. I'm telling you guys, if you can focus on getting on base rather than try to hit home runs all the time and compounding are going to be that secret sauce that's going to absolutely just exponentially increase your value of your portfolio. All right.
Yep.
Hey, Reg Domain said here, massively appreciate your insights, Swanny. So
Thank
there
you.
go. Yeah, get in screen there when you do it, man.
Yeah.
All right.
My camera's
We
really
gotta
close.
go, but as always, hey, listen, folks, we really appreciate you joining in. Do us a favor, hit the like, hit the thumbs up, follow us everywhere, share leave a comment, share the link, let other people know, because at the end of the day, we're here to help you out one way or the other. Like I said, even if you're not joining what we do here, at least come in and listen and gain some knowledge here of what we're giving you for free here. I promise you, most of it is better than what you're going to get anywhere else online. And that's by design, right? As always, remember, the only thing you control is how much you lose. Please keep working on that risk management. Fibo, always appreciate you joining in, buddy.
Thank you.
What's 2 weeks from now? 2 weeks from now is going to be the 20th. You think maybe you might make that? It's right there before Christmas.
I will be here.
Look at that, guys. He said he's going to be here, so now you can jump on him if he fibs about being here.
No,
right?
I will be here. Yes, I will be here that Friday.
Awesome. So we'll get some Christmas talk in there, maybe Santa Claus rally talk before the end of the year there.
There we go.
All right, y'all take care. And by the way, if you join in the chat areas, whatever, tag me, tag Fibo, say hi. We'd love to know that you're there and that you've joined, and we'll help you get started in the best way possible. And everybody else will welcome in there as well. So y'all take care. Trade safe. Have an amazing weekend. Fibo, thank you so much, buddy.
You bet. Take care, Chris.
We'll see you back over at TWC, man. And hopefully anybody else joining up there as well. Take care, everybody.
All right.
Goodbye.